Hi, this is Johnny, your friendly local realtor. I hope you and your loved ones are still safe in the midst of this ongoing pandemic. Today in the September monthly market report, I'm going to discuss current economy and where we are in recovery, as well as some of the things that are changing in the market. Also, this seems to be in the minds of everybody because I've been asked this question a lot. And yes, it's about foreclosure. I'm going to discuss this today as well, so please stay with me. Okay, so first, I want to share with you week-over-week purchase application compared to year-over-year, which we'll see in a minute. This is how many people applied for purchase applications compared to week before. In the beginning of March, with the first green bar on the very left, you can see that it's followed by 4 consecutive weeks of dip in numbers, but after that, we see pent-up demand after those weeks of quarantine, which you can see here indicated by 6 consecutive weeks where people coming out looking for their new homes. And right now, it seems as though we've exhausted some of those pent-up demand during the summer. Now, if you look at purchase application again, this time year over year, this is what we see. And from the left, we see we started out the year strong in March, but we see the dip down during the quarantine. But again, from about the middle of May, we see year over year increase in purchase applications, more applications this year than the last year. And we're right now ahead year over year as you see in those green bars. So compared to week over week that we just saw when I said we've exhausted some of the pent-up demand, and we have, but we're still ahead year over year. So the main reason we're ahead year over year is because of the pent-up demand over the summer. And this is said by the showing time. Homebuyer traffic jumped again in July, recording a 60.7% year over year increase in nationwide showing activity according to the data from the showing index. By looking at this graph, you can see there has been a significant jump in each part of the country, especially Northeast leading the way at 76.6% compared to the same time last year. Now with this much demand for real estate, obvious challenge will be the inventory. According to Danielle Hale at Realtor.com, most recent year-over-year total inventory was down 38%. And she continues by saying, the buyers continue to be motivated by a low mortgage rate and a strong desire for certainty of ownership in an uncertain world. And they're quickly putting offers on homes that come up for sale, driving the overall numbers of homes for sale lower. So we know there are a lot of demand for homes right now, but we're very short on supply. So in regards to future home prices, the high demand and low supply is keeping upward pressure on prices, as you'll see in the next graph. This is the latest future home prices forecast by leading experts for the next 12 months. As you can see, most of the experts are saying there will be a positive price appreciation for this year or over the next 12 months, most of them forecasting a range from 3 to 4%. Hall still believe there will be 1% appreciation, but I have a feeling they will change their forecast soon, because price is always dictated by supply and demand, and what we have right now is the lack of supply and the overwhelming demand. These are the recent change in forecast of some of the experts. Fannie Mae said there will be about 0.4% appreciation, but changed to 4.4%. Zillow flipped from depreciation to appreciation, and CoreLogic made the biggest jump from negative 6.6 depreciation to 0.6% appreciation. And I believe there will be more positive adjustments to be made on their forecast in the near future. Now let's talk about mortgage forbearance. If you look at this chart, the number of active forbearance for the last 3 weeks have started to level off at 3.93 million. Now we have to continue to keep our eyes on this, but what about those people that come out of forbearance and into foreclosure? Isn't that the biggest question that most people have right now? So Jeff Ostrowski, senior mortgage reporter at Bankrate, said this: the COVID-19 pandemic will lead to a rise in mortgage defaults and foreclosures. But as the housing market muscles through this economic downturn, it looks as if foreclosures will be a trickle rather than a flood. Now, as I have mentioned in my previous video, there's a significant amount of equity that people have in their homes today, and that provides them with many options. Now, all in all, there will be some foreclosures, but like what Jeff said, it will be a trickle and not a flood like as in 2008. It's a very different scenario what we're about to see. But let's go back to where Jeff Ostrowski said the COVID-19 pandemic will lead to a rise in foreclosures. Let's address this and find out why he said this, because there's a simple answer for this. The percent of distressed property sales is at an all-time low right now. We were low coming into health crisis, but even lower now. Why is this? Because there is a moratorium on starting foreclosure proceedings, whether it be judicial or non-judicial. They literally can't start, and as people extend their forbearance, which will happen, the moratorium gets extended. As people come out of the forbearance program, no doubt there will be people filing for foreclosure. But again, because of the options that homeowners have due to equity and strength of equity in our country, it will not be a flood of foreclosures. There's another big story right now, and it's about market affordability. And this is a quote from Black Knight's study published by Mortgage News Daily, and it says, "Those shopping for a home can afford 10% more home than they could have 1 year ago while keeping their monthly payment unchanged. This translates into nearly $32,000 more buying power." Now this is very interesting because $32,000 more in buying power is unreal, because back in November 2018, almost 2 years ago, the average 30-year fix was 4.94%, almost 5. And today we're just below 3. The most recent weekly release was 2.86. 2 years ago at 5% and your average purchase price, what would that buy you in the market? And those same dollars, what would that buy you today? What is the increase in purchasing power in the current market? I bet it's quite significant. We could get a clear view of how affordable homes are right now based on this graph. On this graph, the higher the index, the more affordable homes are. If we look at the last 10 to 12 years, going back to around 2008, where the orange bars are, we see that the distressed properties dominated the sales in the market. And where are we now? We stand in the affordable measures like the time of the housing crisis. So we can see how affordable the houses are right now. But of course, the biggest challenge now is for the buyers to be able to find that home in today's low inventory market. Another interesting news is that more and more people are moving out of urban areas to suburban areas. This is what Doug Duncan, chief economist at Fannie Mae, said. "We believe housing will continue to be a sector with relative strength amid the larger downturn. The recently observed increase in purchase demand is largely due to pent-up demand, as buyers are acting now after delaying purchases in the spring. We are, however, seeing some early signs of shifting buyer preference to locate to lower density areas, potentially driving some additional purchasing activity." So there's lots of data to support right now that people are moving from dense areas to less dense areas, urban to suburban market. They're looking for a bigger backyard, looking for an office in their home, looking for a place for their kids to do school in. There are different needs today in a home, and that's certainly driving a lot of demand that we're seeing. Lastly, let's take a look at this. This is very, very interesting. Lawrence Yoon from NAR made this forecast that existing home sales to ramp up to 5.8 million, that's an annualized pace, in the second half. The expected rebound would bring the full year level of existing home sales to 5.4 million, a 1.1% gain compared to 2019. I mean, seriously, who would have thought that we have a chance to beat last year in number of existing homes sold this year? Isn't that amazing? Looking at what's still happening now and what we've been through. Well, we know that economy is getting better and currently unemployment number is still at 8.4%, but this number is on its way down. And we're seeing the real estate market responding very, very well coming out of the health crisis, to the point where we have a shot of beating last year's sales. The second part, Yoon goes on to say that home sales will ramp up again next year, increasing between 8 and 12% as we go into 2021. So that's a huge number, and this definitely translates to more demand and more people looking to buy a home next year. Since the quarantine, home has become more important to people in a short amount of time than ever. And the needs that people have increased dramatically. Also, we're seeing more and more people moving towards less urban areas away from crowded cities, and some people are beginning to say that this could be the beginning of Great American Migration. But all in all, this pandemic has affected everyone around the world in at least some way, and I believe in the future, we'll look back and see the world as pre-COVID and post-COVID. Because this historical event will bring many changes in our lives. I hope you stay safe and see you next time. Goodbye.